Hello and welcome. This is our very first episode of the Investment Deplorables. In this episode, we're going to discuss the strategy of the channel. So, what we plan on doing is investing in high quality dividend growth stocks along with high income dividend yielding stocks. We also are going to be enabling margin on this account, and we have finally reached the $2,000 mark that allows us to enable margin on this account. So we're going to be enabling margin not on this video, but in our next video, we will have margin enabled. But in the meantime, I'm planning on posting every week, just every week with a deposit of a small amount of cash, anywhere between $10, maybe up to $10 or more. But every week we're going to try and do at least $10 of our income into the portfolio. This channel was created for those that are maybe living paycheck to paycheck and feel inadequate when it comes to investing and getting ahead in life because they're living uh, basically at the bottom where it feels like it's pretty hard to get ahead. And I can definitely agree with those that feel that way, and I understand where you're coming from. But bit by bit, if you're consistent, and even if you can only do a couple dollars a week or a month, it's better than nothing. And I'm here to show you that with a small amount of money, you can grow your portfolio into a substantial amount of income and then live off of the passive income that the portfolio provides. So with that being said, we're going to invest in high quality dividend growth stocks, high yielding income stocks, and we're also going to sell cash secured put options. Unless those options exercise, then we'll sell covered calls on those securities. And we're also going to be do a little bit of investing into growth stocks. So there's a big argument between the growth stock investors and the dividend stock investors about which type of investing is better. I say, well, why not combine the two and make a portfolio monster? I mean, primarily, this will mostly be just investing in dividend companies that pay dividends, but we're going to add that growth in there too to make the portfolio grow even faster. So let's go ahead and get started. I've got $62 here. So let's go ahead and invest into our 5 core investments of the portfolio. So DGRW, our high quality dividend growth wisdom tree ETF, we're going to be just putting $1 into this stock. This 5 core portfolio position is all going to be our investments that we're going to make every single week, no matter what the price of them is. After we put at least $1 into each of these investments, we're going to look for our undervalued positions that are selling for less than what I initially invested in, so we can dollar cost average down on those positions and get them to where they're worth a little bit more. And so our next investment is the Schwab US Large Cap Growth ETF. Like I said, we're going to also, while our primarily going to be investing for dividend growth and income, we are also going to do a little bit of money into the growth ETF and our growth stocks. So we're going to put $1 into this one as well. And so that's the 2 of the 5. Whoops. So our next investment is going to be, so we got our SCHG, our DGRW. The next one that we're going to put $1 into is the Schwab US Dividend Equity ETF. This is probably the most popular dividend ETF that's shown in the YouTube community, and we're going to put $1 into that one as well. Our next investment is going to be the SCHD. Now our next investment is going to be our JEPI and JEPQ. So we're going to put $1 into these ones. These both are high income yielding stocks, so there's not a whole lot of dividend growth on them, but they do pay a very nice monthly dividend that That gives us that nice cash flow that we can use once we start investing into other positions. In the meantime, right now, we're just going to be investing into are taking our dividends and reinvesting them into the original positions that distributed those dividends until we get to where we're making about about $10 a month is when we will make a change in the portfolio and start using that income to just invest directly into undervalued positions that are selling for less than what I invested into them with. Okay, so we got our 5 ETFs, and now we're going to do a little bit of scoping and see our positions that I have in here that are selling for less than what I initially invested. So our COPT defense properties were down about 1%. This is a real estate investment trust that I'm fairly bullish on. I'm not going to put a whole lot of money into it, so we'll go ahead and put $1 into that one. And then for our next investments, we're going to take a look here. We've got DEA. I believe I'm a little bit down on this one. We're down 9.8%. This is another good REIT. I believe as interest rates start coming down, as the Federal Reserve starts dropping our interest rates, that this one is also going to go up as well. So we're going to go ahead and put a few dollars into that one. We'll go ahead and put $5 into this stock here. Boom. That one's done. Then for our next investment, Hershey. Hershey is down. I originally bought this around $190 when I started putting a little money into it. Now we're sitting, let's take a look here what the original buy was. The original buy was at 192.37, so we are down a little bit from our initial position. I really am liking the direction of Hershey. I see that they have very good dividend growth when I look at them on Seeking Alpha. So we're going to go ahead, and we don't have a whole lot of money invested into this one, only $28. A whole stock is $188. So we're going to go ahead and while it's down, go ahead and put in a good amount of change. We'll do $15 on this one. So we got $15 for Hershey's. And then let's take a look at another one of our investments that is down. Lockheed Martin. This is a very good government contracting company that helps supply our military with stuff that they need for protecting us. So this one is down quite a bit. We are sitting at just under 5% down on this position. So we're going to go ahead and take a little bit of our capital. We're going to put $5 into this position. The dividend growth on average with this one is around, I believe, 6 to 8% yearly is what I've seen with them. So it's not the highest dividend growth player, but it is a sound, stable business, and it's basically, this company is basically essential to our military industrial complex. So we've got that one. Let's take a look at another one of our positions here. Raytheon. I'm good with that one for now. Realty Income. Realty Income is another real estate investment trust. I really like this one. I just added it into the portfolio only a couple months ago. We are down on about 5% on it. It pays that very nice monthly dividend income. So let's go ahead and put another $10 into this position. Boom. So we got a little bit of a higher position now. So the following month, we'll get a little bit more income off of that real estate investment trust. So Google, let's take a look at Google. I added this position not too long ago. This is one of my growth stocks that I decided to add. It is, in my opinion, undervalued when you compare it to Meta and Microsoft and another company, say like Apple. We are up on this one a little bit, but I have only about $80 invested into it, so we'll go ahead and put $2 into this position. Boom, so we're done there. Okay, so we've got that one. We also have our Dutch Bros that's just above that. I'm not going to invest in that one this week. I just recently picked that company up too, so maybe we'll do a video on Dutch Bros on why I like that one so much. American Tower Trust. So this is another REIT that I'm adding to the portfolio. We are down about 5% on this position, and this is another one that should go up quite a bit in value as soon as the Federal Reserve starts dropping those interest rates. So we're going to probably put the rest of our capital into this position. 1996. Okay, perfect. So I know you guys probably seen that I invested into mostly just REITs this week that we did our trading. And that's mainly just because I do think this is going to be a very high performing sector as soon as those interest rates drop. I believe that it'll easily outperform the S&P 500. At least that is what my thoughts are in thesis. So that's basically it, everybody, for this week's video. If you took the time to watch this video, I just want to say thank you so much. Please leave a like and comment down below some of the things that you'd like me to maybe do or to help improve the channel. I am brand new at this, and I also don't have a whole lot of technology. I am just a guy that works at Walmart and lives paycheck to paycheck. But just remember that there is no salary that is too small to invest and grow a nice sized portfolio for yourself. So thank you guys very much. Next week, we're going to go over some of the goals that we have for the year. And thank you for everything. Until next time, take care.